Before we start, let me ask you a life-changing question. If something happened to you tomorrow, would your family receive only protection or protection and a financial asset that grows even after you're gone? Most Americans don't know the answer because they don't truly understand how whole life insurance works. Maybe you clicked this video because you've heard it's confusing, it's overpriced, yet also capable of building money while protecting your family. So today, we're going to solve this mystery in a way that is clear, simple, honest, and beginner-friendly. Whole life insurance is not just insurance, it's a lifetime financial system and a guaranteed safety net. By the end of this video, you'll know exactly how it works, its benefits, its drawbacks, and what it really costs in the USA in 2025. Here's what makes whole life insurance so different. It lasts forever. Unlike term life insurance, which expires after a set period, whole life stays active for your entire lifetime as long as premiums are paid. That means whether you pass away at 50 or 105, your family receives the payout, tax-free. But the real surprise is the cash value component built inside whole life insurance. Its cash value grows slowly at first, then faster over time, and it becomes money you can use while you're alive, can borrow from it, withdraw from it, or even use it to cover future premiums. Every premium you pay sends a portion into your cash value. That cash grows tax-deferred, meaning it grows quietly without you paying taxes along the way. Some whole life policies even pay dividends, like yearly bonuses from the company. This is why whole life insurance is considered one of the most stable financial tools in America. While the stock market rises and falls, whole life keeps growing steadily. While interest rates shift and uncertainty rises, whole life remains predictable and steady. But before we go forward, here's your quick call to action. Comment your age and your goal, whether it's protecting your family, saving money, retiring early, or leaving an inheritance, and I'll guide you for free. Your comment helps you avoid mistakes and helps this channel grow. Let's talk about the real benefits of whole life insurance. First, you get lifetime coverage, meaning your family always receives the payout. Second, your cash value turns your policy into a financial asset that grows every single year. Third, whole life insurance brings major tax advantages through tax-deferred growth and tax-free borrowing. Fourth, your premiums are guaranteed and never increase as you age. Fifth, many policies pay dividends, giving you extra growth or reducing your premiums. Sixth, whole life is perfect for long-term legacy planning and leaving something behind for your children. Seventh, it can cover final expenses, so your family doesn't worry about funeral costs, And eighth, many Americans use their cash value as a tax-free retirement tool later in life, But whole life insurance has drawbacks, and you need to understand them honestly, First, it's expensive and can cost 5 to 10 times more than term insurance. Second, the cash value grows slowly in the first few years. Third, whole life is a long-term commitment, and canceling early can cost you money. Fourth, it's not ideal if you only need coverage for a short period, like a 20-year mortgage, And fifth, some agents oversell it, causing people to buy it for the wrong reasons. So, why do millions of people still choose whole life despite its higher cost? Because they're not buying just insurance, they're buying certainty. Certainty that their family will be protected, their savings will grow, and their policy will last forever without renewal. Now, let us look at the real costs of whole life insurance in 2025. Prices vary by age, health, and coverage. But here's a realistic estimate for a healthy non-smoker. A 40-year-old pays around $220, $350. A 50-year-old pays $350, and a 60-year-old pays $600, $900 a month. These numbers show one clear truth. The younger you buy whole life insurance, the cheaper it stays for the rest of your life. Your price never increases once locked in. Whole life insurance is the only financial product in America that guarantees 3 things at once: guaranteed growth, guaranteed death benefit, and guaranteed lifelong premiums. No bank, stock, or investment account offers all three together. But here's the truth you must hear. Whole life insurance is not for everyone. It's not for people looking for the cheapest coverage or temporary protection. It's also not ideal for people who can't commit long term. Whole life insurance is for people who want lifelong family protection. It's for those who want a stable financial asset or a guaranteed inheritance for their children. It's for those who value safety, certainty, and long-term financial planning. Now, here's the emotional truth. Whole life insurance, IS&T, something you buy for yourself. You buy it for the people who love you, depend on you, and will feel your absence the most. It's protection for the child who needs you, the spouse who relies on you, or the parents you support. So, let me ask you again. If something happened tomorrow, what would your family receive? Protection for a moment or protection for a lifetime? That's the real difference whole life insurance makes. If you want more breakdowns, deep explanations, comparisons, and real guidance, make sure you like this video and subscribe to Life Insurance USA. Drop your questions in the comments. I reply to everyone. Your future matters. Your family matters. And understanding your options is the first step to protecting them forever.